FOMO only exists when you are the decision maker in the market. I want you to think of an engineer who is constructing a building. Imagine that there are no rules. Imagine that he is not following any map. How do you think he would be feeling? I can guarantee you 100% the only feeling he will be experiencing at this moment is stress and fear. And this is not different from trading. You as a trader, you have to have a system, and this system has to have instructions, and these instructions will be your roadmap to follow. Sometimes the problem is not the trader. Sometimes the problem is the lack of system. Me and my team, after 7 years of trading, I can guarantee you that FOMO is part of the game, only when you don't have a system. You see all these professional traders who build empires. They all follow a system. Trading itself is not hard. Anyone can learn trading, but because trading is relying on the most hardest part of life, discipline. Discipline is the only problem why humans fail and humans succeed. That's why having a mechanical system that will mechanize your workflow is the only first step to step outside of FOMO. The moment you're asking yourself, how do I enter? Where do I enter? You are not trading a system. You are definitely gambling. A trader who have a system would never question the setup, would never question the trade, would never question himself, because he is objectively trading. Regardless of how he feels, regardless how the setup looks like, you don't care. You don't have to care. And without the system, I can guarantee you, the market will always beat you. No matter what strategy you think you're using, markets are always more powerful than you, because markets don't have emotions. Markets are programmed through an algorithm, and this algorithm is making the markets move. Logically speaking, emotions will always lose when mechanism hits into place. Step number 2 to avoid FOMO is reframe missed trades as expected capital. Most traders think that when they miss on a trade, they miss on a wasted capital. This is definitely not true. Why professional traders think of missing trades as money not risked unnecessarily. Because if you think of it, markets always move every day. Opportunities are unlimited. The market has been moving since ages. But the only limited factor is you and your psychology and your capital. So why would you risk a limited capital and a limited psychology over an unlimited market? The problem that you are in rush, the problem that you are very anxious to make money today. And this is not realistic. Even in any job, even in any business you make, you have to be patient. Patience is the number one enemy of FOMO. Patience is the reason why you can make money in trading. And that's me talking after 7 years of wasted money in trading. So every time you miss on a trade, say, I didn't miss a trade. I skipped a risk that wasn't mine. It wasn't mine in the very first place. Step number 3 to avoid FOMO is limiting your potential in the market. And what I mean by limiting your potential in the markets is that you have to limit the number of pairs you trade every single day. So by limiting the number of currency pairs you trade every day, and by limiting the time frame you trade on, you are applying a very amazing universal rule, which is less is more. In trading, less is more. The number one successful principle in the markets is less is more. Because the more professional you get in trading, the more you start to see that noise is destruction. Noise is your enemy. Because we humans are programmed in a way when we got in school or when we got into university, we want to show our skills, we want to show how much we know. So the more we put, the more we feel that we're doing something. But in trading, the less you do, the more you are achieving. It makes zero sense to trade every time frame or to trade every currency pair. You would rather master the movements of the market on a single pair or different pairs, study their behavior, study how they operate, how they move, what time they move, what time they don't move, which day they operate the best, which day they operate the worst. This observation you put on a single time frame or in a specific currency pair will save you years of losses in the markets. Trust me, every career in the world, regardless of trading or engineering or any career in the world, the more professional you get into it, the less you start doing. And when you upgrade in this career, you start to remember, oh, when I entered this career or when I entered this field, I was very anxious, chasing everything, wanting to control everything. This happens in every field in the world. So the less focus you give on details, the more focus you give on structure. And structure is the only thing you need to make money. Step number 4, and one of the most important steps in the market, is lowering your risk. I think you've already seen on our channel that we always talk about risk management. And every single video we uploaded shows the importance of risk management and our profitability. I'm telling you guys, we would have never made money without having proper risk management. The best risk management in the market is having high risk to reward. Because when you have high risk to reward, you can lower your risk to a certain point where you lower the risk of your trade because you have high reward. So instead of risking $500 to make $500, you can risk $100 to make $500. And that only can work when you have a very solid framework. And one of the most supported framework is mastering supply and demand. When you trade supply and demand, you join the world of buying low and selling high. And when you buy low, you have the opportunity to buy at the cheapest price ever. And every investor in the world knows the worth of buying low and selling high, because when you buy low, you are buying just before the price reverses. That applies on selling as well. The highest you sell, you are just selling before the market reverses. So you have the opportunity for your stop loss to be very small and your take profit to be very big. And this alone can be a great risk management system. Now, instead of risking $100 with the stop loss, you can risk the same $100 with this stop loss, very tight stop loss, and this proportionally and automatically gives space and room for your take profit to be big enough. This is the best risk management strategy we have worked in the markets. I'm not talking about few months or few years. I'm talking about 7 years of consistent work in the markets. 7 years of 12 hours every single day in the markets. 7 years of believing gurus. 7 years of trying every single YouTube strategy. And unfortunately, this didn't work, and this will never work without a proper risk management. Step number 5, and the last step to avoid FOMO in the markets, is dealing with the markets on our perspective, not money perspective. When you discuss money, fear will enter the room, and this is very human. But when you are discussing R-based trading, money loses control over you. Because now you are not focusing on money. Now you are not focusing on the score. You are focusing on the game. And as Warren Buffett says, you have to focus on the game, not on the score, if you really want to win. The moment you look at the score, you will feel anxious. You will start to do anything just to increase your score. And this might work in any sports game when you have this motivation, when you have this urge to make it. But in trading, unfortunately, you have to keep calm. You have to know that your system will generate income in the long run, not on the short run. If you look at our P&L in October, we almost made $2,000. In November, it was a negative month, while in December, it was very huge, almost $10,000 in December. We traded exactly the same way. We didn't even change the time frame. We didn't even change the currency pair. We only traded EURUSD. And this alone shall give you a very important idea that market is moving on a random algorithm. The more you spend time in the markets, the more you will realize that every month the market changes. Every month the behavior of the market changes. No trader in the world who spent years in the markets doesn't know this truth. Markets will never move the same way every single month, and that depends on many factors. Logic will tell you to stay stable when something is moving all the time. The market is always moving and changing. So you can never get to a point where you can adapt with this change. You can only stay where you are, applying your system, focusing on the game, not on the score.